Afternoon, everyone. This is Brad Matheny. It's about 12 o'clock out here in California. This is a quick little update to the Plan Your Trade video. The markets really have moved right up into my topping pattern. Let me come over here and find it. Try to share with you where we're at. There we go. Remember, we called this topping pattern peak on the 18th and the 20th. And I've been highlighting on my charts over here that we're looking right around this area for a sell hedge major topping pattern setting up right over here, right around the inauguration. Today's the first day of trading after the inauguration yesterday. And you can come in here and I'm going to go to a quick little 30-minute chart. And I just want to show you how the markets have rallied up and stalled right into this previous high level around 602.5, and really just stalled out. Now, it's pretty quiet kind of trading today, but I want to show you some other things as we move into this. Real quickly, let me come back over here and go to my regular watch list. Bitcoin's back up at 107. Okay, we'll take a look at that a little later. Let's come over and take a look at gold and silver. Moving up into that channel. I talked about this morning about how gold looks like it's reaching that apex and trying to break away. The next big move for gold, as I keep telling you, is going to be up in this 2,800 level, maybe 2,820. I think silver is going to attempt to make a move up to this 3,185, then 3,280 area. We're getting that move, which is metals are actively hedging against risk right now and moving upward. But what I really wanted to show you was kind of back over here, and you need to be aware this is somewhat conceptual. I've been working on a couple new tools in trading in PineScript. Really starting to like PineScript, by the way. Kudos to the guys who created it with the different versions and the improvements that they've made. It's pretty simple to work with once you kind of learn the context. And there's actually quite a bit of information out there, example code on how to do things. So, if you're having trouble and you're trying to work through something and you don't know how to really code, you can spend a little time, start with something small. This particular code is quite simple. It's just mapping the day changes. So, when we go from one day to another day, I'm mapping the previous day's close. And at the same point in time, I'm storing these into an array so that I can go back as many as I want and try to figure out the Fibonacci ranges, the 382 and 618 Fibonacci ranges based on the close to close ratio, which is what this is doing. The basic theory of, and I can show you back over here, the basic theory of trading, go to a daily chart, is that when you're in an uptrend, you typically see higher closes, higher close, higher close, a little bit lower close, higher close, higher close. Same thing here, higher close, higher close, higher close. When you're in a downtrend, you typically see lower closes, lower close, lower close, lower close, lower close. So the whole concept here behind trading is that price, attempts to roll through these types of cycles up and down as we're trending. And that's kind of what this is all about. It's kind of like the support resistance levels that we're looking for. The yellow line represents the previous closing price level based on the day changes. And then these are the Fibonacci ranges, the 382 and 618 level for resistance and the 382 and 618 level for support. And generally, if we stay above the yellow line, like for example, I'll come over here and just show you this. We stay above this yellow line right here, this would become our support level down here, 581.28. We stay above this yellow line. We're technically bullish for the day. Now, I've added on a new layer, which is above the 382 to 618 support layer. which is the previous day's support layer. You see here that there's a 382 level, there's a 618 level. So as long as we stay above the current 382 and 618 level and the past 382 and 618 level, we're generally in bullish trending. So you can kind of come over here and mark this as, okay, we come in, we're above this, we're in bullish trending, and you can see what happens. Nice big rally. But again, doesn't always work out. So you have to understand this is more for guidance in terms of range expansion and range contraction. So obviously, you can see here we were bottoming, kind of basing into this mode. We've gone in from a bearish trend where we kept coming down through these levels and eventually got down to this level here. And this is where we rolled into kind of a reversal trend here. You can see that we started out below the yellow level, rolled into a reversal, got above the yellow level and broke through the 618 level lower and 618 level higher. So this was really a very key reversal, right? It broke through resistance. It was outside of support to begin with. And now you can see we've come back down. We've retested support down in this area. Off of this move here, reestablished it, closed up in this upper area. Remember, higher closes are indicative of an uptrend. Lower closes, as these yellow lines are stepping down, are indicative of a downtrend. So what's happening over here, guys, when we take a look at what's happening with the current market, we're in an uptrend. We're tightening in range. We're still above the previous level. This is the current level. Very solid trending. We're well above the 382 and 618 levels. We can come back here and we can actually look at previous levels if we wanted to and try to extend them out and say, hey, these might be areas of resistance. I think that what I'm trying to tell you is that, in my opinion, we've gotten very extended here. We're well above these peaks up here. And I'm kind of thinking that we're going to see that topping pattern roll into some sort of a downward move, possibly rolling sideways and then breaking down over the next day or two, really kind of just breaking into that pullback downward trend. So just kind of alerting you here that it sure looks like, if we continue to roll off of this peak and roll back down, which is very likely in my opinion at this point, we're going to see some consolidation. And where we would likely be headed is we would likely be headed down into this lower channel again, back down into this 580 area, trying to refine support. So, we have an area here where if we were to come back over to this chart and realize that we have a potential breakdown coming off of this topping pattern, and I think we're going to be rolling down into this 580 area. So I really do kind of believe that that's the move that's setting up. This topping pattern has been, predicted since, well, months ago. So you come back over here and you look at this. This topping pattern has been predicted. The way this works, this actually starts, hypothetically, uh, close to 55 years ago. But it's predicting these peaks and bases and bottoms based on Fibonacci and Gann theory. And if my research is correct, we're moving into a topping pattern right now, a real exuberant type of move with after the Trump inauguration, which is going to peter out here on the 23rd with a breakaway, and then come in here on the 3rd, which is a week and a half away, a breakaway, and then we move into this V bottom pattern. Now, again, not 100% sure that the V bottom pattern is going to be a deep low Don't know if it's going to be down in this area. Don't know if it's going to be over here in this area, or don't know if it's going to be up here in this area. Really kind of, a guessing game as far as how far price wants to contract. I still do believe that we're going to be moving into these channels, and that these channels are likely to continue. So, if you were to ask me right now, so to say, hold a gun to my head and say, Brad, what do you think's going to happen? I'm going to tell you that I think we're going to come down here to this level, 576, 580, try to find the V bottom right down into this lower level, right down into here. Make sure I've got the right day. There we go. Right down into this lower level, the middle of the channel. In fact, here, let me try to copy that. Try to draw the middle of the channel a bit. Pick a different color. Pick a different color. Man, I don't like that either. Let's try this one. Let's try that one. Yeah, okay. I guess that'll work. So the middle of the channel here puts us right in that buy zone area, 576 and a half. And it makes sense to me that we're going to, move back to, as I've been saying, really this pre-election zone, which if I were to draw this for you, I'm kind of looking at this area up to this area and carrying back out. I think this is the area that we're going to try to find support after the election. And I think the reality is, if we really pay attention to what's going on, we've got the deep V bottom and then a bottom around the 21st. So these are on the 10th, and then another major bottom on the 21st of February. Then, and this is in weakness. Then we end up in disruption, which will likely be news around the end of February. We end up with a breakaway, and then a breakaway in. Now this is moving into strength. Then we move into a major bottom on March 21st, and another major bottom here around March 24th. So now come back over here and understand that March 21st would put us right here. Let me mark it with a vertical line. March 21st. Looks like I've already marked it right here. And the other bottom is March 24th. So we have a secondary bottom right here. Oops, yeah, keep that active. And we come back over here the 24th, which is right there. That's right on a weekend. Okay, and that's where we have a major bottom. So as you can see, I've drawn these. I'll get rid of some of these. So we have major support right back over here around 415. And I kept telling everyone innovation and robotics would likely be the area, but this sets up our low, sets up our buy zone, sets up a potential recovery up into a sell zone here, likely then rolling, oops, go away, likely then rolling into a weakened trend back down here into a major bottom and potentially trying to roll up on out. So understand that, we have this play, and I've drawn these lines repetitively. And what I believe is going to happen is we're going to move into an excess phase peak pattern. If you follow me on my excess phase peak patterns, you know that this high right over here is qualifying right now into an excess phase peak pattern here. We could come down into this area where I've highlighted this and play this entire range right across this low for many, many weeks. And there we have get rid of that guy. right here, a critical support zone right down in this area, 584, 574, 575. And I think, like I said, we could be playing into this zone for many weeks, channeling through this expanded wedge. So now, you remember this channel I drew right here? Well, look, guys, we have an expanded wedge shaped formation starting to take place off of this high. So if I were to come back over here and over to this area, right across the peak that we have today, that puts us into this kind of broad expanding wedge formation. And like I said, I really think that, we need to look for a base bottom somewhere between 588 and 578 by February 7th, 8th, 9th, 10th, and then rolling back potentially up into a new all-time high up here, and then rolling back down to a potential double bottom basing area back here in April before we start to break out. I think that, again, what I'm trying to tell you is that, in my opinion, it looks like the markets have reached a peak. And what I'm looking for right now is this rollover. I mean, I'm really looking for this to begin to roll into a downtrend right here and break this level either today or tomorrow. So 598 is my level. If we see this come down and break below the 598 area on the SPY, I'm pretty confident we're going to be moving into a downtrend down to about 575, 578, maybe a little higher. And I think that's a pretty good indication right now that the topping pattern back here, this wonderful topping pattern right here, and again, right here, is playing out perfectly. And I want you to remember that I predicted this back in November and December. So literally 60 days before it happened, just like I'm predicting back over here, this major bottom setting up around the 21st to the 24th of March. Remember, that's 60 days out. I'm making this major prediction. We're going to get a bottom in this area. Actually, it's kind of interesting. We get a bottom on the 21st, we get a peak on the 23rd, and we get a bottom on the 24th. What does that mean? Volatility. Okay, that means that we're going to be struggling between a very volatile range, then moving into strength and into a breakaway pattern, which means by the end of the month, early April, we should be moving into an upward trend in potential breakaway trending. So right now, I think the smartest move here, guys, is not to be chasing too many longs and really setting up for a pullback, setting up for some kind of a pullback back down into this, 584, 588, maybe down here, 578, 579, 580. That's the next big move, in my opinion. Okay, guys, talk to you later. Oh, Bitcoin. Let's go take a look at Bitcoin real quick. Yep, there we go. So, Bitcoin, I talked about that this morning. It's really channeling up into this resistance. So, let me come back here, drag this down, and I really want like a 2 hour or 4 hour chart because I want you to be able to see this whole channel phase. Okay. We established this high back in December 17th. We fell immediately and established this low on December 20th within 3 days. Since then, we have been trapped in this range. I know that President Trump is planning on opening up crypto, but I'm going to tell you that, the process of opening up crypto and Bitcoin and making the U.S. a center for this type of technology is going to take some time. I really believe that Bitcoin and crypto have already pretty much priced this in since the election. So the big question right now is, do we get above this 108,347 level, or do we stall out? Now, currently, take a look at this. You can see that we are in this flagging formation. This is another excess phase peak set up right here, coming up into this peaking area. We're either going to invalidate and move higher by breaking above this 10,468 level roughly, or we're going to break down into probably this 92,300 level and try to consolidate. So right now, like I said, it's playing out beautifully up into this channel, getting very close to a topping area. And I would suggest, like I said, if the markets break down and Bitcoin breaks down, we could see a fairly strong move potentially in Bitcoin back down to this low. And remember, that low is the same low we've been dealing with now for months. Okay, really, it's been going on, since way back over here in November, December. But this 92,500 level, pay attention to it, guys, because once we get down into this 92,300, 92,500, we're going to be trying to find some support down here. And I think that's what's coming. So, pay attention to my research and let's see how this plays out. Like I've been trying to tell you, I think that logically, if you look at the SPY right now, well, this is going to have a lot of data on it. I think we've reached that peak. We're losing the momentum right now. We're rolling very consolidated. I see the SPY moving down into this 594, 593 area over the next day or two, maybe a bit deeper, maybe back down to this 585 area. Because this is support as identified by Fibonacci. So this gives us support. 593. Let me come over here and do this. So you have it right here, 593.21. And then we have support down here, 587.25. And then we have support down here, 584.75. And lastly, we have our bit of support right over here, which we will just mark as 596.91. So again, these are the levels I think you want to try to look for in the next 3 to 5 days. And it looks to me like the S&P is struggling right now. It's been a great move. I mean, literally, it's been a good, solid move. But it looks like it's really struggling right now. We'll see how this plays out. Currently, I've exited all of my long trades except for one in XLI, and I'm letting that run a bit. And I've hedged to the downside. In other words, I bought some protection in case the markets roll to the downside. All right, guys, talk to you later.